All right, guys, welcome to episode 3 of the List to Survive podcast, your raw, uncensored real estate podcast in the city of Ottawa. Today, I am extremely happy to announce we have the GOAT of all mortgages, the one and only Chris Allard. Chris, thanks for coming. And we usually like to start off our podcast with what we call an elevator pitch. So if you're in an Uber and you jump in, do you throw out that you're a mortgage broker right away? Or do you kind of say like, yeah, real estate investor and I do some mortgage on the side? Like, how would you...
I'm definitely a guy who doesn't particularly care for a ton of attention.
Yeah.
So I usually just say like, yeah, like I do mortgages.
Nice.
Just a quick I do mortgages, you know.
Humble.
I feel like you're extremely modest too, which is good.
Yeah. I think honestly, we're in a sales role. I should probably push it out a little bit.
Yeah, sell it more.
Mike throws the business card right away. I sell real estate. You want a house?
I don't take Ubers. I drive everywhere.
I will tell you quickly before we dive into anything. When I met my wife, the first night I met my wife, she was wearing like a mesh shirt.
Yeah.
And it was like a night out, and I had my business card, and I put my business card in the back of her shirt.
Sneaky.
So she was walking around the bar, and it said Chris Allard.
No way.
First night I met
power
her.
play.
Yeah.
See, I've never heard like an actual success story.
I like that.
I've had buddies take my cards and they give it to like random people, and you'd always get those random texts of them like playing around with you, but it was never like, wow, that's awesome.
Yeah.
Is that how you met your wife?
I had met her a few minutes earlier, yeah.
But that literally propelled
That's a good
it.
introduction though.
Well, I had to close the deal, man.
Yeah.
So, yeah.
Yeah, that's smart.
Yeah. Nobody else was going to go dancing with her at the club.
No.
All that to say, he starts off with a humble, I don't mention it, but then follows up and put the business card and his
I might
wife's.
start doing that.
Yeah.
So speaking of mortgages, how long have you been doing it? How long have you been a mortgage broker?
Yeah, quickly, 13 years into the space.
Jeez.
Yeah, it's been a bit of a wild ride lately, but the story as to how I got into it, no one grows up saying they're going to be a mortgage broker.
Yeah.
I don't think. So for me, my story essentially is I went for a beer one night with a friend of mine, and he was there with a friend of his, and the guy was talking about a boat and a penthouse and a big SUV, and I was like, dude,
What's this guy do?
man, what do you do, man? And he was a mortgage broker. So honestly, I entered the business when I was 20 years old. It was a very much materialistic kind of thought process.
Yeah.
Jokes aside, my old man was worked at CMHC, ran bank branches. Mortgages were a little bit table talk at home. Like I kind of understood it a bit more than the average 20-year-old. So it was perhaps an easier segue, but that's kind of the silly story as to how I got into it. Yeah.
I
never knew your background, your father. I never knew that.
So you had ties to it. So it was an easy fit.
Oh yeah, my whole family, they're like lifers at CMHC. My grandpa worked there, my grandma worked there, my aunt currently works there. Yeah. So I basically run CMHC actually.
Were they pushing you into it at all? Or
No, not at all.
No.
Not at all.
He has the in. He has the in with CMHC. Now that I know that, whoever's watching,
It's pretty
call
smart.
Chris, get the intel.
I like it.
How was working with like family?
Yeah.
Like your brother's on your team as of what, like a year and a half, 2 years now? Or has he been behind the scenes?
Yeah, prior to the pandemic, actually, my brother joined us.
Okay.
So he was out of university, just not totally sure what he wanted to do. And I said, like, if you want to try this, join. If you like it, great. And if you don't, that's cool
Move
too.
on,
Yeah, so my brother essentially runs the pre-approval side of our business. So any new opportunity, new client who wants to figure out what they qualify for, I'd say 90% of those clients have spoken to my brother, and he's the one that confirms what they qualify for. So integral part of my business, probably
like
the
the
most
starting
important
point, yeah.
piece. Yeah, like he's
Land on Phil and then...
Yeah, I like that. How do you like working with them? What's it like? Tough?
It's awesome. It's
good?
awesome until you try to do like a planning session. He's like,
Yeah.
Chris, man, like honestly, quit asking me these questions.
Yeah, that's a problem,
Yeah,
right?
yeah.
When like Eric and I kind of battle all the time, but when you're a brother, it's a whole different level.
Yeah, but you know the truth is, honestly, he's like one of my rocks at the office. Like you can count on him no matter
Trust
what.
him.
He's the best.
Yeah.
He's the best.
Yeah, like I had met him for the first time because I only met you like a couple months ago,
Yeah.
within a year, and I met him at when we went to dinner there.
Yeah.
Well, it's a small world. Like,
Yeah.
I didn't know his brother was Phil, but we had mutual clients that like went to school, and like we had a party one time, and like he's like, yeah, my brother does mortgages. Like, oh, he's your brother. He's like, Chris Allard. I was like, who? And that's how I met his brother, and I was like, there's no way in hell it was the same people. Like, I knew him for his brother, but then when you meet, you're like, what the hell? It all comes...
It's wild how it ties in. Speaking of tying, we had a guest, Max, on. Obviously, you know Max. So you
Yeah.
guys have been doing it for like a long time, same
Yeah.
amount of time. He's real
boy.
estate, your mortgages. How'd you guys
Yeah.
get tied up together?
Yeah.
And like relationships, like how do you keep that business relationship and like friendship?
Yeah. Well, you know, we're friends first.
Yeah.
So that's obviously the the core part of our relationship as buddies. But yeah, we met at university, and he was the guy who was sitting with the guy with the penthouse and the big SUV. So,
oh, I love that.
Yeah,
So
I know who this is.
Yeah, so for sure. I mean, listen, we've been longtime friends, and I met him, as I said, through university, but through a different friend of ours, JP, as well. They played on the same hockey team for, I think it was Junior C Bandits.
Yeah.
So,
Yeah, he knows.
Yeah,
He used
yeah.
to play.
oh yeah,
Yeah, back in the day.
So
back in the heyday.
that's how I got to know Max, and we hung out every Friday and Saturday for many years, and in fact we actually lived together for a while.
I never
prior
knew
to,
that.
Yeah,
I never
prior
knew
to,
you guys lived
Wow.
prior to meeting our lovely wives. We
shout out.
lived together in Little Italy here in Ottawa, so we had a few good nights for
I
sure.
would
Small world.
love to be a fly on the
Yeah.
wall in that
Yeah.
household.
Yeah, we definitely have a few stories that shouldn't be on the podcast.
Less than 9 to 5, more 5 to 9 with these guys Friday to Saturday. Just
I love it. I
I'd
love
love
it.
that.
So we have a couple listeners that are mortgage brokers, obviously,
Yeah.
realtors as well. Any tips for them, kind of just to navigate this market or just getting into the industry? Like when you started, how was it? What, like for your brother, what'd you do? What tips did you give him? kind of
Yeah.
thing?
Yeah, I mean, it's definitely a challenging market right now because the real estate market and the mortgage market are in a challenging situation. Rates are high,
Yeah.
affordability is tough. And you guys know transactions are tougher. Files are falling out on inspection. The prices are negotiated a bit more and stuff. So I was chatting with a broker last night who's a little bit younger, and at the end of the day, it kind of brings us back to the basics. Like if you want to talk a bit of mortgage brokering, it's really knocking on doors, making sure I take you guys out for coffee and gaining business that way, perhaps.
Boots on the ground.
Yeah, a lot of brokers work with financial planners. A lot of brokers now have really ramped up their Instagram game and got a ton of followers. I don't.
What we're doing, exactly.
A little bit more of
It's a
this.
change of pace.
Yeah.
For sure. So I don't have the secret sauce at all. I think the reason I've gotten to where I am is I'm like a third line hockey player. Like I will outwork you.
Yeah.
That's about it, man. I got no secret sauce.
That's good though. Work ethic's huge,
I'd say
especially in
the
this industry.
third liner's doing pretty damn good, I think.
Yeah, for
Better
sure.
than pretty damn good.
Yeah, I think you're up there, man. I want to ask, since we're talking about the rates and stuff, like renewal shock.
Yeah.
So we see all these headlines with, I think they said on the Globe and Mail, there was an article about 900 billion in renewals.
Yeah.
Is there any like validity to that? I mean, there's definitely renewals coming, but would you say like the shock value is real, or is it more just kind of headlines to be headlines?
Yeah, I can't speak to like how many renewals there really are because I read the same articles you do, but I don't know how factual they really are. What I can confirm though is that in 2020, which was the first year of the pandemic, the real estate market was on fire. So there was a lot of transactions on the mortgage side of things, and simultaneously, a lot of people were renewing their mortgages early or refinancing, restructuring to lower their rates. A lot of these people took 5-year fixed rate mortgages. That means the renewals are 2025. And then simultaneously, you've got in 2022, a lot of customers, a lot of borrowers took 3-year fixed rate mortgages. Those mortgages are all going to be up in 2025.
Oh, yeah.
And then on top of it, many of the
true.
economists are saying rates should be lower by 2025. So
You might
I
be
don't know.
interjecting, like them saying like rates lower by 2025. It's obviously speculative. No one knows, but
Yeah.
is it possible? Like, do you see in any kind of world we live in where rates go
Continue
like
to go up.
mid fours?
So
Or is that like
I think a lot of the economists are suggesting that the new like future norm of rates will be in the mid fours. They're not saying they're going to be down to 2%.
Yeah, that's not gonna happen.
But they're saying they should slide away from the 6s. So yeah, they should be lower than what they are now. All that to say that yes, I think 2025 is a year where mortgage brokers are going to be very, very busy. Hopefully that means that we can make a few dollars for ourselves, and hopefully that means that we can save a lot of our customers some money. So
Absolutely.
I think 2025 is going to be great for us, and as realtors, if rates do come down, I think that'll give you guys some
It'll
activity
be huge
too.
for us too, for sure. I think. Yeah,
It's a good learning curve too. Like seeing
Yeah.
COVID or like even 2020 to like honestly like mid 2022, like even last year, rates were like, I don't top of my, what were rates like start of 2022? They weren't, it was somewhat like low fives?
In 2022, I think they were in the threes actually still.
Even worse. That's what I'm saying. Like the jump was so quick that I think for us, like even moving forward, is such a good learning curve. Like at any point in time, things can just new pandemic, inflation goes crazy. Like, hey, inflation at one point was close to like 7-8%
Yeah.
in like 1 month. Think about that. Now we're like what, like 3.8 or something?
Yeah. Which I think is one of the hot topics now is like, does the Bank of Canada actually need to get the inflation to 2%? Because that's been the target.
They're not gonna hit
From
it.
what I understand, the 2% targets get reevaluated every 5 years. So you're not going to hear the Bank of Canada change it.
Oh,
Now-
I thought it was a quarterly. Like I thought every quarterly really interesting.
Yeah, so from my understanding, and honestly, I'm not an expert at that part of the space, but I understand that in 2026, that's when they kind of revisit it.
So goals still,
With
okay.
that said, the Bank of Canada could choose to change their language and not say, "Hey, our goal is still 2%, isn't 2% anymore." But if they do that and they say the new goal is 3%, well, it's not really going to give the chance to the market to actually get somewhere near 2. So,
Fair.
one of the chief economists at CIBC, Benjamin Tal, says he believes that inflation numbers should be 2-ish. So maybe 2.5.
Yeah,
maybe
what that
inching
is
close
means,
to 3.
yeah.
It doesn't have to be 2.
I see.
In fact, if you take out the increased interest payment in people's mortgages, the inflation numbers are actually closer to 2. Like the inflation
what a
includes
stat.
payments.
Really?
Yeah.
Oh, that's true because a big part of inflation is going to be what? Debt, mortgages, and payments, right? So I assume that's a big factor in what. It's the housing market, right? It goes hand in hand.
So in short, what Mr. Tal was saying is ultimately the inflation targets are probably closer than what they truly seem.
Do you think, like, it's obviously speculative, like if the Bank of Canada sees inflation stay the same, could they still lower the rates even though inflation may continue to hover in like that high 3s?
Yeah.
Is that a possibility?
They definitely could. However, in conjunction with the government, like I don't think our even though we are going through a challenging time, and I think as realtors and mortgage brokers, we're seeing less transactions and people are living a bit more paycheck to paycheck or struggling a little bit.
For sure.
The government has no intention to stimulate the economy. Like they don't want 2020 all over again.
No, hell no.
And if they lower rates quickly, that's what we're going to see.
Yeah, it can turn into a bit of a shit show.
I mean, think about. I believe last year there was 1.2 million new Canadians, and I think this year's number is something like 800,000 or something.
Yeah.
I saw,
So think about all these new Canadians. They all need to live somewhere. It's either renting or owning.
Something's got to give, right?
Yeah, we have a bit of a problem on our hands. The rates don't really need to go down for values to go up in a few years.
I'm so happy, man. I think a lot of people don't put that in consideration. Like I started crunching numbers this week, so I was like, things just don't make sense. I'm just curious. And I was looking it up. I told him, I was like, in the years 1971 to 1976, we actually built and started more homes than we did from the 2015.
Yeah.
I understand it was a pandemic and the landscape. I get it, but you can't tell me nowadays with all like technology and the advancements we have,
We should be building
we
more.
can't build enough homes quick
Right.
enough to take in what we're bringing in, right? Like it just doesn't make sense. But I guess that's a housing minister and immigration it's above my knowledge.
A
But
lot of
like,
red
come on,
tape.
something's got to make sense, right?
So CMHC is saying that we need 6 million new homes in Canada by 2030, and right now we're building roughly 300,000 per year, which basically means we're currently short and we will be more behind.
Yeah.
But historically, we've been short. So all that pent up demand from like 10, 15, 20, it's all built up. And then you put on how many, I don't know how many, what's the target for Immigration Canada? I don't know what it was. You said 800,000?
I saw one, yeah.
Or
5.
1 million last year? It's like
Yeah.
the targets are,
Yeah, I think
it's ambitious. I'm all for it, by the way. Like I'm not against it. It's just maybe put more, like I saw like
Something
they,
just not adding up.
but they put it, I forget who it was. I think it was a CBC article. The guy was saying, I forget his name. I wish I could quote him, but he was saying like the housing minister is now going to consider actual housing into the immigration stats. I was like, doesn't that go hand in hand? Like healthcare,
I saw
infrastructure, transportation, all that does not go hand in hand
yeah.
with bringing in.
Yeah.
I just don't get it.
Yeah, it doesn't seem that complicated.
I know,
but maybe it is. I don't know. I think for you guys and myself, maybe that means that a city like Ottawa ends up having more multi-generational homes, right? There's more family members living under one roof, and maybe we see more SDUs, or I don't know what's going to happen. I think it would trend that way, but Ottawa's housing is not really built with a bunch of triplexes. Like compared to
No,
Montreal, you go to
it's
Montreal,
not.
it's triplexes everywhere.
Everywhere.
It's not really how we're built here. So I'm eager to see how our market changes.
Like, do you see a lot of files where clients are trying to get either like a bungalow to convert into like a duplex, or like they actually target duplex, triplexes to live and then have someone else
Have their like family in the basement kind of thing?
We currently have a file exactly like that. It's a triplex, and one of the units is owner occupied.
So that's probably going to be the trend.
I think so, but let me rephrase. I mean, we don't have a bunch of these duplexes and triplexes,
Yeah, you gotta build them, right?
So I don't know. I think maybe people will add more SDUs, but it takes money. I mean, SDU today no longer costs just $20,000 or 30 or 40. I mean, you're talking big numbers. So do people have a bunch of cash?
Extra cash laying around to build that? Yeah, it's a little tricky.
Likely no. But that was also what I was thinking. I was like, it's like some of the, even in the city of Ottawa, like the zoning rules, they're trying to make it so you can build more multifamily, stuff like that. I think they had like a Bill C-23. It's like you can now propose a 10-unit apartment building without having the setbacks and certain restrictions. But it's like, it's all great, but like how much is it going to cost me to acquire the land and then build?
Yeah,
it's not feasible. I don't know one person that successfully built under that new bill. You might have more clientele than that, but I don't know anybody who pulled it off. So like, it's great to have the idea, but like,
it's still not cheap.
Maybe have an incentive to pull it off. Then maybe have better housing and everything follows suit. But
I think at the federal level, they've taken the 5% GST off.
True on new, it's true.
But I was thinking, like, imagine right? You took those dollars instead of doing a 5% GST rebate or deduction. Imagine you took those dollars and the government helped cover the permit applications with the city.
Love that.
That'd be even cooler.
Yeah.
I think logistically be too complicated, but I think that'd be pretty cool.
Well, you're investing in now, like your citizen, right? Say we're the city of Ottawa, like now you're saying at federal level, but like there could be an incentive to do something like that. It's like, we'll help you get that permit, we'll help speed it up, we'll help pay for it, and then maybe incentivizes builders to build. Or give them like a tax break. It sounds bad, but
it seems
we
like
need more housing.
Those are bad words, man. What are you doing?
I know, but you got to come on at some point. Like,
I
understand at the end of the day, like there's money to be made, but if the city's not doing it, the government's not doing it, then who's going to do it? Like being a landlord nowadays, not exactly the funnest thing to do. Like how many people are going in that we know want to be landlords? Nobody wants to do it.
Not like it used to be.
Well, a lot of the properties don't cash flow when you buy them today. That's probably the toughest part. I get a lot of questions on the multi-units, right? Like people who
it's gonna be hard.
You got a few triplexes and you're like, maybe I'll sell a few triplexes and buy a 12 unit. And you're like, okay, my tenant's been there for 20 years, paying $900. It's a tough building, so you're either doing like 40% down, 50% down. I'm generalizing here. There are purchases that don't happen that way, but there's a lot that are tough, and that's why you're not seeing as many multis trade. I mean, large multis.
You never see them.
They don't trade a ton.
No, and if you do, it's always behind the scenes.
Did it used to happen a lot more? Like I'm a little newer, right?
He's been in the business longer than me, but I don't think so.
But it just seems a lot tougher, for sure. Like the people are.
Well, the numbers used to at least work.
Yeah, and now they just don't. So it's tricky times.
But we do have a few clients who are really good at buying and restructuring the tenant group that's in the building and
make the numbers
renovating and refining. And I mean, people have built an entire career on it. I just think that it's tougher to do.
I think it's ambitious too. But do you see, like, I know I always see like amortization periods being like these 50, 60, 70 years. Is that like a real thing where banks are saying like, okay, look, maybe you hit your trigger rate. We're going to extend you an extra 25 years. Now you have 50 years instead of 25. Is that like a real thing?
It's not that they're saying we're going to extend you. It's that they have a variable rate mortgage that has static payments, meaning the payment does not change. But the rate went up. It doubled. And so your payments should go up. The payment isn't even enough to cover the interest cost. And so what that means is every month, if you started with a 25-year amortization, now you got 25 years, 1 month, 25 years, 2 months, and it's just growing.
So you're saying
just
like
extending it.
And so what happens is the banks, lenders that would be like TD Bank, Desjardins, both have static payments. So those are two quick examples. And what they'll do is they'll reach out to the customer and say, do you want to increase your payment to make it at least like cover the interest, or do you want to keep on the path and really increase your payments a lot and have principal and interest? And by the way, you're actually $12,000 behind because you now have a 40-year amortization. So would you like to do a $12,000 lump sum payment on your mortgage?
Probably not.
So some people will say yes, some people will say no. It depends on your situation, of course.
Can you say no? Like if a bank approaches and says, hey, look, you've in this 12-month period have added $12,000 on your principal. You're pretty much just paying interest and some. Can you say no, or they're like going to tell you, look, you have to give us a lump sum and then we'll renew you at?
in my experience, they've been very lenient in working with borrowers. But at renewal, like all these conversations, they're not renewing yet.
So it's gonna happen.
So at renewal, I think the lenders will want to restructure something somehow.
That's the equity.
At the very least, and I'm kind of speculating here. I don't really know factually, but I would suspect that they kind of bring it down to say, well, your maximum amortization is maybe 30 years, which is what the current norm is.
So we're not seeing like the 50, 60. Like I remember.
You do see
I remember
50.
hearing that.
Yeah, you do see 50 for sure.
But that's a real thing. 50 years.
What happens is your paper says 50 years because of mathematically you're not paying any principal.
Okay. Yeah, I get
and
it.
so if you leave it as is, it would be that and more. At one point, the lender will make an adjustment or the borrower will make an adjustment.
So on paper, it may say that's that long, but realistically, they're not.
It's just a number on the piece of paper.
Yeah. Is that just to make the numbers work in that moment, or else the person's going to be shit out of luck and you're forfeiting the property type thing? So is it like just like a tool to keep people in their homes or investments to not foreclose? Or
no, it's purely showing the math. It's purely saying
numbers,
if you continue going down this path,
That's what the math
it will
says.
take you 50 years. But even that math is kind of messed up because the borrower is actually not paying any principal. So they're not going to pay it at all.
You're just gaining more,
It's going the wrong way.
Yeah.
So there's two types of variable products. I don't want to get too, mortgagey on you.
Go into it. Go into it.
They love this stuff.
I think it's great, man.
So there's the variable rate mortgages that have static payments. You'll see those at TD and Desjardins, as I mentioned. And then you're going to see variable rates, which people call adjustable rate mortgages, where the payment will fluctuate up or down with the rate fluctuation. So if rates go up, payment goes up. Rate goes down, payment goes down. There's no limit as to how high it can go, no limit as to how low it can go. And so in the past, or still today, my job is to explain that there's risk and your payments can fluctuate. Yeah. We used to say, hey, we have this like cool TD Desjardins version where your payment won't change. I'm saying that obviously we have a lot of disclaimers that we say, but the sexy part of the static payment isn't so sexy right now.
Yeah, I could see that, especially if you let's say you locked in like at 3% and you're on that variable, now you're like what, 6s easy?
Yeah.
So your principal is going up real fast.
Yeah, a lot of the variable rates right now, most borrowers are somewhere between 6.2 and 7.2.
Makes sense. Do you see variable as like a more hot commodity as a product, or is that fixed actually what people are like? What do you see more in your clientele? Yeah,
great question. I mean, historically, variable has proven itself to be more cost effective over time. So if you're like a pure history will repeat itself. Like go variable and it'll be fine, probably.
So historically, variable's been lower, right?
That's right. But to really answer your question, we mostly have a conversation around two things: cash flow and economics. So first and foremost, can you afford the payment? Today, the 5-year fixed is the lowest rate, meaning the lowest payment. The next most popular product is a 3-year fixed rate, and then variable is typically a little bit more expensive. So if you're not going to be comfortable beyond whatever that 5-year fixed rate payment is, then we can't have a conversation about the variable.
Yeah, you're fixed.
If you're very comfortable and you can have a conversation about fixed and variable, then we dive into more of the economics. Do you believe the variable will be cost effective over the next X number of years, 5 years, let's call it?
Remains to be seen,
and on that, the additional point I want to make is that it's not only about the rate, there's also mortgage penalties. So fixed rate mortgages have bigger penalties if you break the contract compared to variable rates. So if you're someone who's buying a property today and you think there's a strong chance you're going to refinance that property next year or in a couple of years, you probably want to be on the variable side because your penalty will be 3 months of interest probably, and which is the smallest penalty possible.
Best case.
That's right. So you're going to see a lot of people who want to build a bit of a real estate portfolio go from one property to maybe, 4 or 5. They're essentially buying, refinancing. They're probably on the variable rate track because or else your penalty costs are going to be astronomical. And as rates go down, like if rates start going down, the penalties to break fixed rate contracts are going to be even bigger. So that's going to be interesting. I mean, it won't be a surprise if you see $30,000, $40,000 mortgage penalties. Oh yeah.
Have you seen a lot of panic lately?
With borrowers in general?
Yeah.
My team, we proactively phone our clients twice a year.
Yeah.
And we try to have a conversation and plan for the future. And so we'll say, look, right now you've got this rate, this payment. In 2 years, if rates don't change from now until then, this is what your payment would be.
Yeah.
let's try to plan for the future. Is there money we can, you can start putting aside to help yourself or get used to these payments? Or, have you looked at your credit card statement lately? Is there a subscription to,
You can
some
remove kind of
magazine
thing.
that you're not reading that you should cancel?
Yeah.
We try to have those conversations.
It's good that you stay on top of that and stuff. I mean, and obviously you do well, so I see.
It's funny
why,
though,
for
because
sure.
you almost become like a financial advisor at that.
For sure,
Like,
yeah.
you
You're getting
don't
into their
just-
lives.
Yeah.
Like, and making sure they're making the right decisions,
like-
because people spend.
Yeah.
It's like,
People
should I
like
buy
to spend
this?
like useless subscriptions. It's for sure.
But it is important because like I want to buy a car coming up, but it's like I'll call him before I buy the car to say, hey, if I buy a car at this price and this payment, how's that going to affect me on my approval in 6, 7, 8, 2 years, whatever it is, right? I think more people need to know that. Like if you're going to make a big purchase, maybe check in with your mortgage person.
broker, yeah,
Yeah, and it
Kill a
depends.
deal, right?
For
Like,
sure, absolutely. It's the biggest deal killer around.
for sure.
car.
For sure.
It's all fancy until you see your mortgage.
Yeah, car payments are like $500 to, I don't know, like $1,400
It
if
ain't
you got
cheap.
like the brand new F-150 maybe. I don't
It
know.
ain't
Yeah.
cheap.
Think
I'm
about
looking
that.
now. It's not
Yeah,
good.
he's in that process, and it's like I always tell him like, watch out because he wants to get a mortgage soon. He wants to buy, so I'm like, just be careful. Don't sign like
Yeah.
a 5-year lease.
Yeah.
You
At
can, live in,
$1,200
you
bucks.
can live in your car. You can live in your car or
It better
buy
be
a
nice
house,
though.
pick
It
one.
better be nice.
Trailer Park Boys 2.0, Mike in the
Yeah.
back of his little Chevy.
Yeah, it's tough
That'd be
times
jokes.
for sure. So overall, though, have you had any like crazy horror stories or anything like over the years, over your 13-year career?
I mean, spark my creativity here. That's a tough one that I hadn't really thought of prior to showing up here today. So horror stories. I mean, what you're talking like defaulting on mortgages, or are you referring to like not qualifying, or like what?
There's gonna be stuff like that. It has to be, right?
Anything that you think like would spark the interest of the viewers?
Yeah, I think. Honestly, I think if you do the proper planning, there shouldn't be a ton of horror stories. But I'd say the most frustrating part of our space these days for borrowers is just the lack of qualification. The truth is people don't qualify for very much.
Yeah.
And so we're adding co-signers a ton on applications. Mom and dad are co-signing. I'm seeing the reverse as well. So let's say mom and dad are retired now.
The kids are
well, they don't
co-signing?
qualify to buy.
Oh, true.
buy
The
next
income,
house.
the income went down.
Yeah.
So now the kids are co-signing, and that's why we're seeing maybe more multi-generational houses.
That makes
too.
sense then.
Like it's
Yeah.
interesting, right? So obviously that's far from a horror story,
Yeah.
but it's a fun, it's an important piece to it
For sure.
that we're seeing. What we're seeing that's I think like fascinating instead of a horror story. Let's maybe say something fascinating
Positive.
is
Yeah.
there's a ton of wealth transfer at this moment in time. And what I mean by that is the baby boomers are transferring money to their kids, grandma, grandpa giving money to their grandkids. We are, I believe, if I'm not mistaken, recently I attended a presentation with Sagen, which is CMHC's competitor.
Right? Yeah.
And it was something like, they kind of like showed different regions of Ottawa and how many files or what the percentage of those files were had a gift as part of the down payment. And most of the pockets were like 25% of the files had gifted down payment. Think about that.
Jeez, that's a lot.
So
That's a 25%. Think about
it's
it.
a quarter, yeah.
so think about that. When you've got a client who
smoke.
says like, "Hey, Mike, like, I don't understand how my friend just bought this house." Like,
Parents,
the truth
grandparents,
is,
aunts,
they
uncles,
probably have like a $200,000 gift.
Yeah, it makes sense.
And mom and dad co-signed, and we're seeing that a lot. And it sounds crazy, like hundreds of thousands of dollars.
But they
as
got
a gift.
it. Yeah, if they do, if you're lucky enough and you've planned accordingly, you can help your children or aunt, uncle, grandparents, whatever it may be. So you're seeing more co-signers than previously, or would you say it's about on par what you've seen?
I haven't seen a material change, but I'm in the grand scheme of things, kind of just one guy. So I don't see more co-signing, but I definitely see a lot of gift.
Could I, for the co-signers, I've always, on like a lender's perspective, I understand why it's attractive to have a co-signer. There's another person on the file. They're now essentially on the mortgage, so the payments don't get paid. Well, it falls. Let's say my dad co-signs for me. I don't pay. My dad's now on the hook for the payment. From a bank's perspective, I understand why they like that, but adding a co-signer would it not maybe push the buyer/purchasers into like a different sphere of payments where, like, let's say you buy a $600,000 house, and with the co-signers now they can afford $1 million. Mom and pop aren't going to pay the mortgage, but they're now on the hook for that bigger lump sum per month. Can I argue that's like almost risky for a bank that like the parents are on the hook, but the kids are actually paying the mortgage? So now they're pushing this like higher bracket, more payments, and if it goes to shit like now, what do you do?
Well, the answer to that is that Just because you qualify doesn't mean you should do it. And so, so a mortgage broker's job is not only to tell you what you qualify for, but have a budgeting conversation to say, like, this is what your affordability is. And then also, sometimes the lender will say, hey, like, yes, like on paper, you've now made the file qualify, but how will the client pay?
So that's actually a conversation. So I just jumped ahead and I assumed, I'm like, okay, the bank signs off, great. Eric's dad's on the file, he's good. But can I actually afford it? Different story.
There's a lot of advising.
Yeah, absolutely. So,
of course, I should have just.
And keep in mind that the term cosigner is almost synonymous to co-owner. If you're a cosigner, you are at least a 1% owner of the property. So to me, that sounds synonymous. There's also the term guarantor. So that would be someone who is signing to guarantee the loan, but they are not on title to the property.
So they don't have like a percentage.
That's right.
Okay.
Now, everyone would prefer to be a guarantor rather than a cosign. Typically or historically, if someone is a guarantor, it means that they are probably on the file mostly for credit reasons, like they are bringing strength from a credit side of things, whereas a cosigner, it means that their income was probably used to help support the file.
That makes sense.
And so that's the nuance. Now, there are exceptional cases why the lender might be okay with a guarantor. For example, let's say, mom is a CEO of a massive company. They just perhaps have to be careful from like a litigation standpoint or whatever the situation is. There's always exceptions to be made, but most of our clients and us in the room, we're average people with the average dollars. We don't really get those exceptional exceptions.
Yeah.
Interesting. No, that makes sense. I always knew the difference from a guarantor and a cosigner, but like from a bank's perspective, is there like a benefit to one or the other, like on an approval, or is it the same thing to the day, like how much income you show on paper? And they're both on the hook technically, right?
Most of the files are going to be cosigner, and that's because the cosigner is showing income to help the file qualify.
Interesting.
And plus, they are now part owner of the house, so they're more likely to care.
Yeah,
that's fair. Unless you really trust your kids or grandparents trusting down. Yeah, it's not easy. My first mortgage was co-signed.
Yeah,
and that was back when rates were cheap.
Yeah. Keep in mind that oftentimes mom and dad are like, I'll sign, but it's way more than that. Like, you are part of the application. I need your income documents. If you own property, I need to know the mortgage. I have to have a mortgage statement and property tax bill for all these properties. You're a whole other applicant on the file. You go through the exact same process.
When you're running that through, because obviously you have that discussion with them, do you find a lot of shock? People kind of pull back? Do you find any issues when they hear that kind of stuff?
I think there definitely is a certain percentage of parents that are like, I didn't realize what was involved and I'm not really interested in that. Yeah. But, and then there's the entire other percentage of people who are like, either I help my kid buy or they never buy. So I'll do it. I mean, to each their own, and there's reasons for or against, and everyone makes their own decisions. But there certainly is a bit of reluctance with the co-signing side. And keep in mind that as a co-signer, you might not have full visibility on whether the payments are actually being made. Like,
true.
Once the payments aren't made, you are notified. But are you on the bank account where the payments are coming out of? Do you have visibility of these accounts?
Yeah.
I mean, I don't want to challenge the relationship between parents and kids, but it's probably something we should do a better job of with chatting about and explaining the risk to the cosigner.
That's both of us. I think realtors and mortgage brokers. Like, sometimes we're like the first line. It depends how you start, because sometimes like you start the file, send off to realtors, the realtor sends it could be, I guess, both
depending
ways.
Depending on the person too, and who it is, and how prepared they are.
Do you see more, I guess, defaults or defaulting on like fixed rates versus variable rate? I remember, I don't know if this still applies, I don't know if I'm allowed to say this, but I remember you told me you were at a TD conference, and a gentleman from TD, whoever it was saying they've seen more defaulting on fixed rates than variable rates, which in my mind makes no sense. Because the fixed rates on the fixed rate, the payment shouldn't change, but I guess that's just overall inflation that's pinching people down.
Well, so this was already a little while ago. I think this was like a year ago we had that chat.
Yeah, it could be full of shit right now, but I'm just
you're right.
I don't know. I remember you saying that. It always stuck with me, and I told so many people. I'm like, man, like TD once said.
Yeah, for sure. Now I don't know how to fact check that.
No, yeah. We'll trust it.
But what he was saying ultimately is that in either case, the default rate is almost non-existent, but it happened that the fixed rates did have slightly more of a default rate at the time. And these were all assumptions in the room. We were just talking a bunch of brokers and the bank as well. And the thought process is, well, maybe the borrowers who had a fixed rate because that's the only thing they qualified for. And therefore, maybe their financial situation was actually tighter to begin with. And the person who had the variable was probably more comfortable financially. Or like if you look at the overall portfolio, maybe they're more comfortable financially and less impacted with cash flows. And yeah, even though their cash flow was impacted because rates went up, it's less impactful than the inflation of, the grocery store impact of the person who's living paycheck to paycheck with their fixed rate. So I don't know. This is a full-on assumption.
I think you nailed it. I think that the fact I totally overlooked the fact that maybe the fixed rate is what they got approved with. They couldn't go variable. So like if they're already tight at the fix, things around them go up.
Yeah, things change around gas. Everything.
Yeah. I didn't take that into consideration.
So I used to say this a lot. It was like, in general, I think I even mentioned this earlier today when I was like, a lot of, when I look historically at my clients, it was 50-50 fixed and variable, but that's not totally true. Really what I should say is it was actually 75% fixed and 25% variable, but out of the 50% out of the 75% fixed, 50 of the 75 could only get fixed.
Okay, so they were
so then
that makes sense. They didn't have the option.
So then so then out of the people who did have choice, it was actually 50-50.
Okay, that makes sense.
That's what I should have asked when he said that. I should have, because that makes sense now.
Yeah.
Now I'm like, okay, I'm on board. This all adds up.
Yeah. So you can always skew the stats.
Yeah.
Somehow. Yeah. Like 75% are fixed. Yeah. But really, is that? Like,
Yeah. No. You worded it perfectly. I think that makes total sense.
It's good.
Good old mortgages. Yeah. If you want, I mean, we've been grilling this guy for I think 35 minutes on mortgages. Yeah. How about just like a personal question? Like, what does Chris Allard do downtime? I know you got a family, a newborn, but what do you do as like, I'm not gonna say passion, but like I know you played hockey, stuff like that. But like, is there something that you do that maybe like we don't know? Yeah. As like a pastime, just like I don't know, something. I
mean, the one of the owners here, Irina. Obviously, we're all friends with Irina. She sometimes refers to me as Mortgage Chris, and we're like, best friends, hang out on weekends. So the joke is Chris only does mortgages, and honestly, I mostly do mortgages, but I'm an avid Sens fan, so I was at the game last night, watch a lot of hockey. I typically, if I'm watching it from home, fall asleep in the third period, didn't get to watch it. But yeah, listen, it's mortgages, hockey. I've got a 2-year-old daughter, which I love. It's definitely a change of pace. Humbles you, brings you back to reality a little bit. I'd love to say I have a bunch of hobbies, but I don't.
You're busy. I get it.
Work and family, a little bit of sense.
For sure.
Absolutely. You get tired of like it's classic. As soon as we go in like a group setting, people will just chat real estate with us, which I actually like, and like I don't mind talking about it. But like, do you ever get to a point where you're like, I don't want to talk about mortgages? Like I'm out with friends and they're like, hey, the rates, what's going on in inflation? You're like, oh my God.
I feel like you get it more than we get it, for sure.
For sure. Because it's rates. It's such a hot topic now, right?
Well, as an introvert who doesn't have a bunch of hobbies, I don't mind talking about the one thing I know really well,
I don't know if I categorize you as an introvert.
So I have to turn it on or off. I get tired turning it on.
It's being on all the time.
For sure. I get we get tired, but listen, I enjoy it. If people have questions, I'm happy that people consider me that resource. And I see it as an opportunity today and tomorrow, and if I'm just giving advice, that's okay too. I'm always happy to answer any questions. Yes, I get it all the time. I feel bad for my wife more than anybody else. Like, how boring is that? We talk mortgages at every table we have to sit at.
Tired.
People go, hey, Mortgage Chris, how are you, man? That sucks.
She's on the sideline.
Well, it means business is good where people trust you, which is a positive. Sure. But I'm always curious of that because like we get it sometimes, which it never bothers me. I actually appreciate it. I like having that conversation to see like the other perspective. But the mortgage world is just so hot right now. Yeah. Everybody who sees you is going to be like, where are the rates at?
Yeah.
Like, it's just,
you know
what I mean? Like, I feel for you.
Yeah, it's. I try to, in a dinner setting or on outings. My wife is way cooler than I am. Like, just graduated from her PhD at U of T. Works at global affairs on the G7 team. She's spoken at the United Nations before briefly. Way cooler. So if I have a way to
get
move the conversation over to her, I think it's a lot more interesting for the rest of the table.
Yeah. I love that.
Yeah.
Like traveling too, like do you ever talk mortgages when you guys travel? Like I know you went to you were in France recently.
Yeah.
Was that it?
Yeah, that was we never did our honeymoon because of the pandemic, so that's
true.
why we were in France. Hey, listen, I mean, being self-employed is great, but we are sometimes slaves to the business, right?
Yeah.
So I have my phone. You guys are still sending me
All the
referrals,
time.
which I love the
Yeah.
opportunity, but it means I'm still replying
Yeah,
while I'm
never
away.
ends.
No matter where you are.
Yeah, for sure. But we can see that as a negative thing. You never get to turn it off. But like,
Can be
man,
a
I'm so
positive.
thankful that I have
Yeah.
the business I have. Like, and now I have the team. We've got 6 people on my squad.
It's growing.
And so that means that in certain moments in time, I could turn it off probably more easily now.
Yeah.
Fair.
But I have to remember that I am the face
Yeah.
of the business, and so people need to rely on me, and I want to be there for them. So yeah. For sure.
I've seen it. I remember he was at Formula One in Montreal. I want to say like last summer, and he was doing like a mortgage for us. And I remember I was like, I saw his Instagram. I'm like, this guy's at Formula One right now. And he had like an Aston Martin jacket. I was like, you can tell like you're a fan. I didn't even know who he was cheering for, but I'm like, he's got the jacket. He's there, and he's still answering mortgages.
Yeah,
and I was
sure.
like, poor guy.
He's a
man.
beast.
Yeah, quickly before we wrap this up, the truth is my brother is the F1 fan. He just brings me
Oh,
along.
Phil.
No
Yeah,
way.
he brings me along because he's a nice guy and I pay for the tickets.
Shut up.
There it is. There it is.
But the first year we went, it was raining, and the only rain jacket they had was the Aston Martin jacket.
It looks sharp
So
though.
it looks good, man. Honestly, I feel
love
really good when I wear that
Yeah.
jacket, and that's why I have an Aston Martin jacket.
I
Do you
love it.
have like a team for F1 or Phil? Did Phil
Well, at
choose-
this point, I'm an Aston Martin
So the
fan.
Aston Martin guy. Yeah,
He's
yeah,
got
yeah.
the jacket to
Yeah.
I
match.
forget who the driver is. They always change so quick, but
You know what?
that Netflix series reeled me in.
Yeah.
Yeah, it's quite a good one. But my brother's a Verstappen fan.
Yeah,
Ah,
he's
Red
big
Bull.
right now. He's huge. Yeah,
Yeah.
Max
He wins
is big.
everything.
Yeah,
I'm
Red
Lewis
Bull's at the
Hamilton, but
top,
no
I
big
think.
deal.
Yeah,
More of a
he's
Mercedes.
down to the bottom. But no, this was good.
No, it's good,
Appreciate
man.
it,
I'd
Chris.
say as like
That was
closing
good.
notes, if anybody wants to find you or get in contact with you, what's like the
Yeah.
best way to reach
plug
you?
your info there.
Minus, I mean, we'll put it on the screen when we do it, but like email, text, call. What's
Yeah, I mean,
You're
you
easy
find
to
me
find.
online, chrisallard.ca. Mostly people reach out to me over email. That's probably the easiest and quickest way.
just Google them.
Just
Yeah.
Google.
You have wild reviews, by the way. I was checking that the other day as I had a little notification. It reached X amount of views on the review I left them.
Yeah.
Then just for jokes, I was scanning your reviews. Like, this guy's lights out.
Yeah.
There's hundreds.
Yeah. Yeah.
I just Google. I was
Yeah.
gonna say instead of contact, just Google Chris Allard. You'll find him.
Yeah,
Yeah.
won't be hard.
Yeah. Well, I'm again super thankful that I have so many
Yeah.
raving fans as customers. It's phenomenal.
It goes
guys.
hand in hand. Without you, we can't do our job, and I guess
Yeah.
vice versa. But I think like mortgage brokers, especially nowadays, like we have to be leaned upon, right?
Mhm, yeah.
Especially what we do, because things can go south real quick.
So it's good to have
Yeah.
a good one.
But oh, buddy,
Thanks, Chris.
Thanks.
thanks for
man.
taking the time, man. Do it again in a few
Appreciate it.
months, and we'll see if the rates kick down a little bit.
Can't wait.
Okay.
Yeah. I'm
Thanks.
looking forward to this.
Yeah.
See you.